Hi, in this video, we're going to talk about trading the S&P 500 futures on a long-term basis. We've done a video pointing out the short-term S&P trigger points with the breadth and some of the inflection points on the short term, always taking into consideration what the long-term inflection points are saying. Remember, long-term takes precedence over intermediate over short-term when it comes to the power of the index inflection points. And you can get those index inflection points very easily, very quickly by going into the futures section, one of two ways actually, and just sliding your cursor across the cells and you'll get those major inflection points. Right now 1953 on the long-term weekly, unfair lows, and right now the bottom of our profiles right now 1846 and 1918 on the top, just as it states right there on our daily. You can come in here and get a flavor of those inflection points right there by going into the charts here, and you can also get it by going into our landscape charts and noticing all the inflection points on all the time frames by just a mouse over and then one quick view, which I love. But you can also go into the breadth charts. I'm going to go back to my, again, staying with the S&P 500 index futures. I'm just going to pull up our breadth charts and I'm going to just show you how this works. We're going to give our latest inflection points. There's at 1953 on our weekly. There's our 1846, 1918. So what it's doing in our breadth charts, which is giving again, an aggregation of underlying instruments trading above profiles, below profiles, and within profiles on each time frame, right? But you're also getting those inflection points right there in your face on the weekly, the daily, the same as you're getting within the futures section of the scanner. So that being said, what we want to do is really talk about how do you trade long-term S&P 500 moves in the futures. And if you're not trading those long-term moves, at least being aware of them. And also, if you're a long-term investor or a short-term trader, but mainly a long-term investor, being aware of when to go to possibly go to cash, either go short, go to cash, or hedge the long portfolio. So really important features here I'm getting ready to go over. And I want to just pick some points in time that are, in my opinion, extremely critical over the last couple of years. And what I'm going to do is, just for simplicity's sake, I'm going to take the middle ground out. We're going to come back to that. As you can see, really been a chance to go long and stay long over the past couple of years. But recently we had a little bit more activity looking at our long-term weekly profile breadth calculations. On 9/26/2014, we crossed over to negative territory. We crossed back above. Took about a month to let the S&Ps go north again. But more recently in the summer of 2015, had some kind of mixed signals here, and at the same time started, coming off really high middle ground. When the internals are showing that half the stocks in the S&P 500 on a long-term basis are in that 50% range, we're usually going to get a move one way or the other, and then we want to look to that guiding light situation of, when does the amount of stocks trading above profiles or below profiles cross over each other. And we had that warning again, portending the breakout one way or the other. They had the breakout on the downside. But let's just kind of go to specific dates. Let's go to 9/26, and let's also start looking at this is 2014 9/26, and then let's also look at some of these other ones, namely around the end of July on 2015. So let's go to a long-term chart, and let's pull up our long-term weekly chart. This is S&P 500 continuous futures. Keeping in mind 9/26. All right. So here's 9/26. This general area right in here. Now, again, these are long-term changes. Short-term changes are going to happen a little bit quicker, and the breadth is going to, show you that. But as we look at this, not being able to get above our index profile unfair highs, the long-term breadth changing a negative, this was a sell structure that's set up with the internals changing a negative. We had that middle ground get really high before then, and then when we start breaking below index inflection points, these are not ones to be bought here. These are ones to sell. And why are they ones to sell? Why are they situations to sell? And I'm going to kind of drag this over and try to expand on it. Had some volatility around that unfair low around 1950, but remember, breadth being negative is in your favor to sell breakdowns and sell resistance. So as we look at the breadth changing on or around 926 before we started breaking down below our index profiles. Internals caused us to not want to buy this bounce, but to sell and be able to sell with conviction below some of these profiles. I'm going to go back also to the dates that we looked at the end of August or mid-August when we were actually trading on the highs of the year and getting below this inflection point here. And again, this is 817, and I'm going to go to my breadth chart here really quick. And I'm going to pull up our long-term breadth, and I'm going to show you, where's the 817? Well, we actually started turning negative well before, even in July, into June, July, all the months of July, while we were trading on the all-time highs of the S&Ps. Then we had that big-time breakdown right before 817 bar happened on our weekly there. So again, here's the sell-off in the market. We got the clear warning signals ahead of time. And then going back to our S&P charts, it was okay to lean against this big inflection point up here at 2079. Now, a lot of people were thinking back then, my God, we're on all-time highs. How in the world is the breadth in the internals of the S&P 500 changing to negative? Well, guess what, folks? It happened actually back here. All right. So then you were playing around, maybe getting stopped out a little bit, but again, selling with conviction every time we got back in the fair auction and totally not wanting to buy support here, waiting for another breakdown to sell again. So again, the long-term view and the long-term weekly and daily breadth calculations were telling you with conviction it was okay to sell these events. And where do you pick targets? Well, again, that's a great question, and here's maybe an answer. So again, getting to that 70% right there that we talked about in some previous videos, especially on the short term, when we get in that 60, 70% range, and there's another one right there after that sell-off before, not quite as high, but those are areas to look at when it comes to taking some profits on these moves. You don't have to. Again, the crossovers back above or the full-blown clear signals, it's not okay to be short anymore, as was the case recently. So again, what's the answer to the question of how do you use breadth and long-term profiles on our S&Ps to trade and hopefully squeeze some points out of the market? You've got to pay attention to long-term inflection points, and you've got to look at breadth, and you've got to say, I want to block out one side of the marketplace. I want to only be selling against this fence here, as the case we just stated before, and against this fence here. I don't want to be buying this. I want to be selling it. Selling the breakdown, leaning against it for my stops. Do I want to be buying on this inflection point? In that instance, no. Breadth stayed really negative. There was no clear-cut signs. We got some signs on overextension, and we also got, in that instance, we ended up getting back in those areas. We got some daily breadth starting to cross over, some green shoots, if you will, on some of the other lower time frames where some of the internals really started to change. But again, the long-term futures trader, the long-term investor needs to pay attention to these changes in breadth alongside our index profile inflection points.